Hi all, and welcome to this presentation with Maha Energy. My name is Carl Fredrik Schjøtt Pedersen. I'm the analyst covering Maha Energy from ABG Sundal Collier. And with us today, we have the CEO of the company, Jonas Lindvall, presenting the equity story. So with that, I'll leave the floor to you, Jonas, and after your presentation, we'll have a short Q&A session. So Jonas, please.
Thank you, Carl Fredrik, and thank you, ABG, for putting this event on. We are very happy to be here. And as Carl Fredrik mentioned, I will be presenting Maha Energy. We are an oil and gas company. We are active in the upstream sector of our business. And today I'll spend a little bit of time going through primarily really what sets us apart from our competition, who we are, and I will also take a sneak peek at our healthy financials, and then we'll dive into our 5 assets that we operate in 3 different countries. So let's dive in. Next slide, please. I would be remiss not to mention our normal disclaimer. Any forward-looking statements I may be making today are subject to change. So they may be within or outside our control. So I just want to remind everybody that. So next slide, please. Okay, I mentioned at the onset here, Maha Energy, we are an oil and gas company. We are in the traditional exploration production sector. That is the upstream sector of the business. And we are present in 3 countries, and we have a total of 5 assets. Now, what sets us apart from our competition, I think really what sets us apart primarily is we are a very top end heavy. We are subsurface oriented, so we're very strong in engineering and geological, geophysical sciences. The management team of the company is primarily all petroleum engineers and geologists, and we strive to deliver value. It sounds a bit cliche, but we really try to focus on bringing dollars per barrel instead of barrels per day. And there is a difference in that. I'd rather be producing 2,000 barrels a day very profitably than 20,000 barrels a day just breaking even. So we're a very value-driven company, and that really also sets the direction of where we operate. So all the assets that we operate are derived from looking for underperforming oil and gas assets. Because of our very conservative values, the portfolio that we have are located in areas where there's existing oil and gas. It's very mature areas. Infrastructure is very present, and it's relatively easy to operate. So that sort of defines of where we are operating. Some of our key strategies that we employ, which sets us apart from our competition, is we have what I call a 3-legged stool, and we just completed that this year, or late last year, with the acquisition of Oman. And that really means that we want to be operational in at least 3 separate and independent legal and financial jurisdictions. And that really is to safeguard the company from political risk and financial risk. The other key strategy that we employ is our risk profile pyramid. And that really states that essentially 90% of all our assets needs to be very low risk, locally generated, organic growth assets. 50% at the bottom are what we consider to be our sort of very low risk producing assets. Organic growth comes through our appraisal/delineation assets. And then, of course, we do employ a little bit of exploration, but that's really defined as near field exploration. And that could be nearby structures that we can very easily use our existing infrastructure to add on if we find something. A great example of that actually is our recent discovery in Brazil. Earlier this year, we discovered a new producing reservoir just above one of our existing producing reservoirs called the Tartaruga, and that really is sort of the limit of exploration appetite. So we're not an exploration company; we are a development company, and we have built up quite an impressive portfolio of assets over the last 4 years that we've been operating. Before we move to the next slide, I just want to say also that we operate all our assets. That's a key strategy of the company. That means that we set the schedule, and that means that we have complete control of how we spend our capital. So we're not held hostage to any partners that sort of can outspend us on developments. So that's a criteria that's very important for a small company like ourselves. Next slide, please. A little bit about who we are. We are a Swedish oil and gas company. We are listed in Stockholm. We were founded in 2013. We went public in 2016, and at the end of last year, we migrated up to the Nasdaq main board. We have a market cap of just over 1.6 billion. I mentioned that we're active in 3 countries. We have a total of 5 assets. They're all operated by us. We have 2 assets in the United States, 2 in Brazil, and 1 in Oman. We enjoy a very healthy reserve base. Our 2P reserves at the end of 2020 stands at just over 48 million barrels. And we do have also some contingent resources that are waiting to be unlocked in Oman of just over 22 million barrels. So if we go to the next slide, please. Our financials have always been quite strong. I'm pleased to say that this presentation is from our last quarterly report, where we enjoyed the 15th straight quarter of being profitable. We did have an impairment write-down, non-cash impairment at the end of 2020. But if you take that out of the equation, we continue to be profitable every quarter. Up in the left-hand corner of this slide, you can see our production growth. We've essentially gone from 1,000 barrels per day back in 2017 to today we're just around the 4,000 barrels per day mark, and we're aiming to grow quadruple production again over the next 4 years. In our industry, we talk often about netbacks. This is a ratio of how much is left over after we've spent money on royalties and operating costs. And as we can see there on the left-hand side of the slide, our netbacks for the quarter, last quarter, it was just over $35 per barrel, which is very healthy in our industry. And that means that $35 per barrel is spent on G&A and capital expenditures and so forth. And what that means tangibly today at these oil prices that we're experiencing today, Brent is just over $74 per barrel. We are growing our cash on a monthly basis after spending funds on G&A and capital. So we have a healthy cash balance at the end of the second quarter. We had just over $34 million, and we're growing that on a monthly basis thanks to our increasing production and the healthy oil prices that we see. The last thing I want to mention on this slide about our financials is, we do enjoy a very healthy net debt. We replaced our 2017 SEK bond with a US dollar loan at the end of first quarter this year. And as I mentioned, because of our healthy cash balance and that we're in fact growing our free cash flow on a monthly basis, our net debt ratios are continuously declining, which is obviously very nice to see. Next slide, please. As the company grows or have grown over the last 4, so has obviously the visibility of the company, and that means that we also need to advertise our ESG initiatives a little bit more. As a result, we, as of August last year, we have a full-time person dedicated to all our ESG issues. I'm very happy to say that we launched our first sustainability report in April this year. I invite everyone to go to our website. Our website is very intuitive, and you can take a look at all our initiatives that we employ on the ESG sector. Some of the tangible things I do want to mention on the environmental side, we recycle all our water and we re-inject all our water that we produce, except at the Tartaruga field. It is not possible to re-inject there. Therefore, we truck that water to a government licensed facility for licensed disposal. All our natural gas, which is a byproduct of our oil that we produce, we turn into electricity, or we sell to local ceramic factories in Brazil. So there's no spillage of any kind in our operations. One thing that I do want to mention also here is I think that ESG has a great focus, but I think it's even before we talk about the environment and social and corporate government responsibilities, we also need to recognize that we are an operator, and therefore we do operate, and therefore workers' health and safety is extremely important. At times, we have over 300 people working at any one site in Brazil, and we do owe them a responsibility to ensure that they come home safe and do not impact the environment. To that extent, we have, since the inception of the company, in fact, we have deployed the DuPont Stop System, which is a behavioral safety program, and that is a continuous learning experience that goes across the entire company. On the corporate governance side, we did do this step up from First North to the NASDAQ main market at the end of last year. Again, I invite everyone to go to our website and explore the governance section of our website in more detail if that's of interest. All right, let's go to the next slide. I want to talk a little bit about our assets, which is really the meat of the presentation. The T field is a producing field onshore Brazil. All our assets are onshore. We do not venture necessarily offshore. That doesn't mean that in the future we might. We do have extensive offshore experience within the group, but we have decided to focus on onshore properties for the time being. The T field was acquired in 2017. At the time, there were several constraints regarding this field. We have worked tirelessly over the past 4 years to really unlock the true value of the T field. Today, it is our cash cow. It is the engine, the growth engine for our company. And we've drilled a total of 3 wells on the field since we took over. We're currently drilling the 4th. There's a total of 5 producing wells on the field, 1 water injector, a significant 2P reserve still left to be tapped from this field. And we did have the success of discovering the Tartaruga, which is a separate sandstone reservoir that was found almost by accident when we were drilling the T3 well earlier this year. On the T field, which is coming close to a plateau production, we should be on plateau towards the end of the year after we finish drilling our first horizontal in the field here, the T4 well. We will enjoy very low operating costs on this field. OPEX at the moment is less than $5 per barrel. We have if you compare it, worldwide, the royalty rates we pay in Brazil are first class. It's 10% to the government and 1% to the landowners in the area, so a total of 11% of the revenues goes to royalties. And we are enjoying a tax incentive initiated by the government in this area, so we pay just under 16% of corporate income tax on these assets. So these are very prolific wells and very money prolific, if you want to call it like that. We will be generating at these oil prices close to $100 million a year from this field once we get up on plateau. Next slide, please. So right up the road from the T field, we operate the Tartaruga field. Here we have 75% working interest. We are the operator. The remaining 25% is held by Petrobras, the state oil company of Brazil. This is a little bit tougher field. It's very complex geologically. It produces slightly deeper as well from the Penedo sandstone, a completely different sandstone. In fact, this is a completely different basin to what we have in the T field. But because the 2 fields are within driving distance to each other, we do enjoy synergies between these fields. We regularly swap equipment and people between these 2 fields, which helps drive down the operating costs for both fields. We did have some setbacks earlier this year and late last year when we drilled the TA3 well. It did not produce commercial quantities of oil from the Penedo on the northern part of the field. We're still struggling to understand the geological reasons for all that. But corporately, we've decided to then go back and focus on the southern side of the field, which is currently in production by 2 wells. And the idea is to ramp up production through drilling multiple horizontal wells into the Penedo 1 and Penedo 6 parts of the sandstone, and bring up production there to about 2,500 barrels a day in 2023. If we go to the next slide, please. I did mention the 3-legged stool, which really means that we want to be in 3 independent jurisdictions. And in Oman, offered that to us at the end of 2020. We were part of a bid round that started in 2019. That was concluded at the end of 2020. We were fortunate enough to be selected amongst very strong competition to operate the Block 70, which contains the Mafraq field. The Mafraq field is a heavy oil field that was originally discovered by Petroleum Development Oman, and this really speaks to the core values of our company. We are not an exploration company. We go and try to extract existing hydrocarbons from existing discoveries, and this is a classical example. The Mafraq field, like I said, was discovered in 1988. It was delineated by 4 wells, got 3D seismic. 2 wells tested significant amounts of oil, commercial quantities of oil back in 1992 and also in 2006. One is a horizontal well, and one is a vertical well. Both tested commercial quantities of oil at that time. For whatever reasons, Petroleum Development Oman did not elect to continue with the development of this field, and therefore the government decided to put it out for international bidding, which we were fortunate to win. What can I say about Mafraq more? It's very shallow. It's only about 500 meters below the surface of the earth. Makes development cost relatively benign. It will require horizontal drilling. It will require some sort of artificial lift technology. We are going to try 1 or 2 different types before we sort of hone in on which direction we want to exploit this field with. Okay, next slide. We at the beginning of 2020, just as the pandemic started really to take root, we made an acquisition to build our business in the United States. This forms another strong leg in our portfolio. The Illinois Basin was acquired roughly for half the proved developed producing value at the time from a financially distressed company. And it just also goes to show the character and the spirit of the company, where we seek out whether there really is value in each barrel. And we have a very supportive shareholding base and a supportive board that allows us to act very quickly in these circumstances. And this was such a circumstance where we had to act quickly. And as a result, we've added significant reserves, but also further growth potential. The Illinois Basin, although it's a relatively small area, it contains almost 100 drilling locations, and we will be drilling 60 of those over the next 5 years. This is an oil price play. At lower oil prices, this becomes a little bit tougher to make profitable. But at these levels, we enjoy a very healthy netback. What I like about this is it's a very low risk, meaning that essentially it is a manufacturing process. This is not an unconventional play. It is conventional. It's 3 stacked reservoirs, which adds further risk mitigation in that if one reservoir is not as well developed in one area, there are still 2 more to produce from. So I call this slow and steady, or our bread and butter of our portfolio. We've just finished drilling 12 wells in this area here. We're ramping up production. Production is growing here every day. I think by the end of the year, we should be about 700 barrels per day coming out of this, representing about 10 to 15% of our corporate production by the end of the year. Last slide, please. Last but not least, this was the LAK Ranch. This is the field that we founded the company on. It is located in the Powder River Basin in Wyoming. It is a tough, it's a bit of a challenging situation for us there. We still haven't cracked the code. 19-degree API. The wells are not producing as they should be in terms of prediction and theory. We are working on trying to figure that out. Substantial oil in place here, about 60 million barrels. That's 60 million barrels in place, anywhere between 200 and 400 meters. And we decided to shut this field in at the beginning of the pandemic because of low oil prices. And we are currently working to see if we can come up with some sort of revival plan for LAK Ranch. But for the time being, LAK Ranch is completely shut down, and we only carry about 8 million barrels of 2P reserves there. And I think that's it, Carl Fredrik, for me. If we go to the last slide, if you have any questions, you're more than welcome to contact our investor relations person, Victoria Berg, with any questions. And I know that, Carl Fredrik, I know that you had a few questions that you wanted to ask.
Yeah, so absolutely. I think the first question is, of course, just to get your confidence and view on your ambitions for this year. So there was some challenges at the TE field in the second quarter. Is it so that this has now been fully resolved, so that you're in line to meet your guidance for the full year?
Yeah, we did have some setbacks in the second quarter, like you said. Essentially, one of our key producers was down for almost the entire quarter for multiple reasons. That has been resolved as of the mid June. We are currently drilling our first horizontal well on the T field, which is not new technologies per se, but it's the first time this has been employed on the T field. The T field produces from two separate sandstones. They are separated by some 150 meters of formation. And so typically these wells were dually completed, vertical wells or directional wells. And we've now taken the step to see if we can put a horizontal in each of those reservoirs. And we're very excited and we look forward to seeing the results of that. We should see some very good healthy rates coming out of these horizontals. As everything else, the pandemic has played havoc with us, and I know people are tired of listening to that, but it is impacting our operations on three fronts on a daily basis, and that has caused for delays, and unfortunately, I think that has shown in our drilling schedule as well. We should have been on production on our horizontal here already, but we're still drilling that. So, we're hopeful that we'll get that sorted out before the end of the month, and we can sort of return to normality there.
That makes sense. I guess operating during a pandemic is of course challenging, and especially given the fact that you're in various locations. And then, given your asset base, how should we think about capital priority across the assets? What is the main, or what's the kind of a core area to be allocated funds first, and what's the real growth engine for Maha?
Yeah, so that's a good question. I think that the majority of our capital have been spent in Brazil in the last 2-3 years. And that was really to get obviously the T field to the state where it is today. I mean, we've almost tripled production since we took over there. We are on track to get up to our plateau, although it's quite a bit later than what we had originally hoped for. Going forward, I think the capital will be spent fairly equally across the assets. The T field will require less and less capital, and Tartaruga will require some capital, obviously, in 2023 and 2024 as we develop that field. And really, Oman will also require an equal amount of capital. So I think it's spread fairly evenly across the assets that we have. Brazil will take less capital, and I think Illinois Basin and Oman will then pick up that capital, the slack in that capital.
Yeah. And then a follow-up question: do you find yourself to be fully invested in terms of asset base, not into the specific assets, but do you find that your current portfolio of assets is the right asset base for Maha, or are you still looking to do more transactions? Of course, you were quite active during the recent downturn.
Yeah, no, we're still looking to do transactions, like I said, but I want to underscore, I mean, the first thing is we've amassed a very, very solid foundation to grow this company, right? We started with nothing. We're currently just around 4,000 BOEs per day, and we are aiming to quadruple that again over the next 4 years. And we can do that with the existing asset base. But having said that, I mean, with this massive energy transition that we're seeing in the market, there are lots and lots of opportunities that are presenting themselves. I mean, all the super majors are divesting, and as a result of that, there are great opportunities that are presented, and we are absolutely looking at adding to our portfolio. Of course, we would like to try and stay within the jurisdictions that we are in, being North and South America. But like I said at the onset, we are a value-driven company. So if there's a great value deal somewhere, then we will certainly look at it.
That makes sense. And what do you find? I think this will be the last question from my end, as time is running out. But what will be the main hurdle, or what should we look for in terms of Mafraq in Oman, which of course is a huge area? What will be kind of the main events in the medium term that we could look for?
Yeah, so the main event in the medium term is that we're currently actively looking for a drilling rig to start drilling there at the beginning of next year. We will drill, probably we'll drill 6 wells to begin with to test some technologies there and get some test production going. That's probably in the medium term. And in the long term, of course, if you're looking past 3 years, you're looking at a full field development of that field, provided, of course, that our test technologies add the value that we think that we believe that it will.
And holding 100% working interest in that stake or in that field, is that the right position, or is it too much?
No, I think we would be interested to look at bringing in a partner to perhaps spread that risk a little bit. But do keep in mind that this is a virtually de-risked project. But I think we are always open for a partner coming in, but we will maintain operatorship under all circumstances, and we will still continue to keep a majority if a partner came in.
Excellent. We are running out of time. I'll leave the floor for you, Jonas, to do any final remarks.
Thank you very much, Carl Fredrik. I think I've said enough, and we thank everybody for attending.
With that, thank you, everyone. Have a good day.